Hey, it's Anthony with Land Title. I came to bring you your update for the month of November in Boulder County. And so let's dive right into it. I think the biggest thing we wanted to look at here was just really what's happening in the fourth quarter and what to expect coming through the holidays. So here in November, we're looking at, a pretty big drop off in our active units of inventory again, but this is pretty normal, right? I mean, this is a seasonal shift that you should expect to see. Largely, this is due to people coming off of the market, though, because you had, a pretty consistent amount of under contracts again this month, but we really are still down about 14% in total solds. The one other thing to notice here is the year to date under contract numbers are only minus 10. So we've actually had a larger amount of fallout this year than we would normally see. Now, if we swing over here to just inventory, I think the biggest part about inventory that we need to look at is what's happening submarket by submarket. Don't forget to dive into this if you're taking listings or you're working with buyers in certain areas. But somewhere like the city of Boulder or the city of Longmont last month had a big drop, so they feel really similar. But Boulder is actually up in inventory this from last year to this year over year by about 11%. Same with Erie, 26% increase in active units, right? 140 units in Erie is a lot of units. Where you come to some of these other markets where, Lafayette says it has a 60% rise in inventory, but 60% above where it was a year ago, it now puts it at 89 units. So that's a huge increase, but yet it's still pretty short on units. Now, then you look at the other part of the pie, right? What about the rest of the county where Longmont down 20% in inventory? It's very, very tight, very, very short on inventory units. And it's still, kind of just plugging along, and it still feels like this really, buyer favored sort of market, even though we don't have a lot of inventory in it. So really kind of allowed to look at them unit or area by area. Louisville, Superior, Niwot, same thing, down in units as well, but they're much smaller submarkets. So what does that mean? It's tough right now because you look at month supply of inventory. We're seeing that drop because buyers are dropping off. Sellers have dramatically slowed down on the amount of new listings coming to marketplace, and yet we have a tightening in inventory to 2.6 months of inventory. It would look like a strong seller's market, right? Now, granted, it's much higher than many years past, but this is kind of pre-pandemic levels. Now, the problem with this is it doesn't feel, if you're a seller, like there's 2.6 months of inventory. That would lean that, sellers had some, sway in the situation here, but really it feels like buyers are, getting a lot for getting stuff sold. So low sellers, low buyers, 2.6 months of inventory feels much more, buyer favored than it would appear on paper. Now, what does that really mean for the buyers and sellers? It means it's taking a little bit longer for things to sell. This is kind of same thing, back to more normalized numbers, but in the fourth quarter, you should see this rise. So days in MLS, 47 and a half days. It's taking, 50 days or so to go under contract. I think that's important to know, but obviously very different submarket to submarket. Somewhere like Louisville is under contract in 24 days. We've seen some bidding wars out there. So like it just kind of varies area to area, but it's all trending in the same direction, right? Q3 should slow down towards the end of the year, and then we'll hopefully get start to chip away at those days in MLS the farther along we get into next year. Now, the price points. This is the one that's interesting. So we had 13 sales over 3 million again last month. That was a really good sign for that part of the market. That's a huge increase in sales there. The $2.5 to $3 million market has had a huge slowdown in sales. Only four of those, but that $1.5 to $2.5 million market, we've seen some consistency there. But here's the deal, right? Slowdown for the whole year to date at the luxury. So anything over 2 million or 2.5 million. Then we had a decent amount of sales from 2 to 2.5 million, and 1 to 2 million has had a huge slowdown in sales because of the cost of money, right? Because it's expensive to borrow money right now. Now, everything under a million, it's really just tough because there's not a ton of inventory, but there's also just not a ton of sales taking place. Turnover is pretty good. You can see it here in the next slide. Month supply of inventory under 1.5 million. We're still around 2.5. Place like 6 to 800,000 has done really well. There's just not a lot on the market, but things are moving relatively quickly. Somewhere in that 30 to 60 day range seems to feel like pretty normal right now, depending on your price point. So kind of share that with your clients. If there's ever a time for buyers to get out there and participate in this market, it is absolutely now before it gets too crazy. Because as the cost of money starts to come down, you're going to see a lot of buyers re-enter the buyer pool. And if you can weather that higher interest rate payment right now, you can always reschedule later. So, or I'm sorry, not reschedule, refinance later. Sold units. So this is kind of where we've been keeping tabs on. I always thought somewhere around 15% might be where we land. Boulder County as a whole is down only 13% in year-to-date total sales now, and that's largely due to the first half of 2022 was really good, right? And then we slowed down, and it seems like we're kind of coming in line with a more balanced and normalized feel for this, higher interest rate environment that we're in. And so you can really see that much more muted response by buyers out in the marketplace. Now, what does that mean for prices, right? Because with low buyers and low sellers, we're not seeing. What are we seeing? I think in Boulder County, the best way to say this is things are really stabilized, right? Last Q4 was pretty ugly, right? Things were slow, prices were down, but also not a lot was selling. This year, it seems like some of what's been selling has been much higher priced, but the trailing 12-month data is what I like to take a look at, and it seems like we're kind of just flat in most markets. Now, Lafayette or Niwot or even something like Louisville has seen what looks like price depreciation because things have really settled, but Longmont's actually seen price appreciation over that period of time too because of the price point in that market. So people are really not selling unless they have to. So that being said, buyers are taking advantage of the situation a little bit, but Boulder County is much more flat. If you get into somewhere like Denver Metro, this might not be the case. All right, so sold units, I like this one better because it's much easier to see. It's much easier to read. We've had a pretty good latter half of the year. You can see in Q4 we've outperformed a little bit. November is about the same. Even though we had a lot of under contracts, we had a lot more fallout. It brought us kind of in line with where we were a year ago, but a different composition of sales. So that being said, I think if we can stick somewhere around the December numbers, which you would probably expect, then we kind of end this year somewhere around this, like, 10 to 15% down year to date. And that's going to be a pretty solid number. Now, it's not the same everywhere, right? Because Boulder, Louisville were only down 10%, Superior, Niwot 10%, Erie only 6% drop. It had a big surge in inventory, but because of that and because of the bang for the buck, buyers really have leaned out there. So you can see some of those differences by submarket as well. Now, the last one I really wanted to talk about is this percentage sold price to list price. We have 98% sold to list price, but the big difference there is this feels pretty normalized for the season, right? Buyers are getting a little bit of a deal, but here's the problem. This doesn't take into account price drops or concessions. And so both of those things really factor into the amount of money your sellers are getting for their homes. Now, if you're working with a buyer, this is an awesome time to buy because 45 or 40% of homes are getting concessions tied to those home sales. So we're seeing a lot of concessions being given. So this is artificially high right now, right? Because we really don't have a great way to calculate that. But what I can tell you is that buyers are much more favored than the data would suggest. So all that being said, hopefully this can help you, work with some buyers and sellers and really get some people off the fence because in my opinion, this could not be a better time to buy a home than fourth quarter right now. This is Anthony with Land Title. Don't forget to like and subscribe to the channel. Tune into the other videos. Hope you have a wonderful holiday, and we'll see you next time.